And we're live.
Hi everyone, and welcome to today's webinar, Demystifying Numbers. Thank you for joining us. My name is Giovanna Lever from Sparrowly Group, and today we welcome our guest presenters, Lisa Maletta and Georgia Lascelles from Bacchus Associates Chartered Accountants. We're also joined by Avril on tech support. Some housekeeping before we begin. Now, your video and your audio has been disabled for the presentation. The session will be recorded and will be sent to all that have registered as follow-up, as well as going up on the Sparrowly Group channels. This includes the presentation slides and the resources. And we welcome you to revisit the recording yourself and share it with colleagues to watch on demand. Now, if you have any questions, please pop them in the Q&A box, which you can find at the bottom of your Zoom screen. And we'll collate them together and we'll go through these at the end of the webinar as a panel. If you're having any technical issues, please also use the chat box and we'll respond to you directly. Now, let's get into today's webinar. This is a really important and big topic, and it's one that many business owners shy away from or are absolutely petrified of. It doesn't need to be the case. Shortly, I'll hand over to Lisa and Georgia, who will take you through what you need to know and do as a business owner to get on top of your numbers and stay that way for business success. Now, Sparrowly Group has been working with Bacchus for 6 years, but day to day, I manage the finances and have built a robust system to ensure that I have a clear line of sight of how the business has performed and where we're heading. This has been especially important in recent months as we've all been affected by lockdowns around COVID-19. We've mentored over 500 businesses in the last 5 years, and confidence around finance is always a big focus in our mentoring sessions, and it doesn't have to be scary. Now, before I hand over to Lisa and Georgia, as you will see, it's not death by PowerPoint, and we want you to concentrate on what we are saying. So with that in mind, we're going to turn our videos off for the presentation and we'll turn them back on for the panel at the end.
So hi all, my name is Georgia and I'm joined here with Lisa, and we are from Bacchus Associates. Today we'll cover what we think are the key aspects that business owners need to know. We'll also be talking about why finance matters, in particular knowing your numbers, your business structure and accounting system, and why having a good support system can be beneficial to decision making.
Why your numbers matter. Your numbers indicate how well your business is going. Having a holistic view on your income and expenses will provide clarity on when you need to make certain business decisions. For example, is there an opportunity to hire a new staff member? Or can you discount your services to assist a not-for-profit? So, know your numbers. The best place to start is to know your break-even. What is break-even? That's our accountant's way of saying, how much does it cost to keep the lights on and the wheels turning? The first step is to look at all your fixed costs. What I mean is the costs that don't change month to month, typically rent, wages, phone bills. Then you start looking at your variable costs. These are things that may change. So things like repairs and maintenance, buying a new computer, just the tea and coffee in the office. Once you sum both of these amounts together, so your fixed and your variable, and you know what the total is, that's the best indication as a business owner of how much you need to invoice each month or whatever period you're looking at, or what you actually need to bring in to make sure you're not going backwards. Once you've determined your break even, this gives you the opportunity to add your margin. That's just our technical term for the cream on top. Knowing your break even allows you to price your services correctly, ensuring you remain competitive, and anything above this amount is the cream on top, i.e. what you get to take home.
Now on to cash flow. COVID-19 has highlighted the importance of knowing your business's cash flow, allowing you to predict when money is coming in and when money is going out to ensure you remain cash positive. Sometimes being honest with suppliers about a small delay in payment or just making a part payment goes a long way. We also recommend, so you're not dipping into your savings or your personal savings, looking at your customers' trends in paying your invoices. So if you hypothetically have 30-day terms, but you know your customers usually pay after a couple of reminders, this means you need to take this into consideration when you pay your bills.
Finally, knowing your numbers will allow you to do two key things. The first one is compare your actual results with your forecasts. This will allow you to make sure you can get a better deal for your money. It's bang for your buck. Can you save money on your phone plans, electricity, insurance? And number two, it allows you to make an assessment of what you can do differently next time and see if you've missed any revenue opportunities. An example of this is if you just don't have enough staff to pitch for new work. If this is happening a lot of times, then maybe investing in an additional staff member, although while it might hurt at the beginning cash flow wise, will pay dividends in the long run. Finally, the ATO, as scary as they may seem, are there to help small business. During COVID-19, the ATO is assisting small businesses by offering payment deferrals for certain tax debts. If you just need a little bit more time to pay the ATO debt, it's best to contact your tax agent to discuss your options.
So now on to finance is not a one-size-fits-all. Seriously, not every business is the same. So what works for one business may not be ideal for another. Businesses can be set up in a variety of structures, each having their own pros and, unfortunately, cons. Typical structures include companies, partnerships, and sole traders. The simplest structure is a sole trader. This means you run your business under your own name, you pay tax in your own name, take on all responsibility personally, but there's also little opportunity to be tax efficient once you make more than $180,000. A company, compared to a sole trader, offers reduced liability and can offer greater tax efficiencies. You should be structuring your business to align with your objectives and your needs. For example, you may want to have the most tax-effective structure, even though it may cost you more to administer at year end. On the other hand, others' objectives may to have the simpler structure in order to minimise the cost of their tax affairs. And now for the three letters that keep us accountants busy, GST. Not every business is required to register for GST. You're only required to register for GST if your current or projected GST turnover is more than $75,000. If your turnover is under the $75,000, then in most cases, the choice is yours. If you do not register for GST, then you do not charge GST on your sales. But unfortunately, you also can't claim back the GST paid to your suppliers. We would recommend you talk to your tax agent in respect of both your structure and your GST obligations.
Getting your systems right. Whether you use a shoebox for your receipts, and I have seen this in my years of practice, or an Excel spreadsheet or an accounting program, getting your systems in place will save you time at the end of a quarter, end of a financial year, or just at tax time.
And honestly, it doesn't have to be scary. Most businesses start with a basic reporting format. Typically, this means an Excel spreadsheet summarizing your income and your costs. When you make the decision to move to an online accounting system, a few things that we personally recommend are: 1, choose an accounting system you are comfortable with. We love Xero, but you may not. As accountants, we have experience across all systems. You should pick what is right for you. And 2, when transitioning into a new system, pick a clean date. This means don't transfer your data mid-month, hypothetically the 18th of the month. Rather, set it for the end of a month or the end of a financial year. Once you've made that choice, get to know your accounting software, especially if you're doing the bookkeeping yourself. Knowing the basics can go a long way to ensure you are able to obtain and extract the numbers that are important to you and your business. We can't stress enough that you shouldn't be afraid to ask for help. By asking questions along the way, you make an accountant's life a lot easier. Sometimes the best time spent is the online free courses that your software provides. This is a great way to learn the basics. Financial health check. This is honestly as simple as setting aside time to look at your business as a whole.
Why should this be all year round? We suggest to always look for efficiencies. Your accounting software is the best place to start. Xero, for example, is always updating itself. So there are functions now and there where we can look at your cash flow, your business analytics, like debtor days and creditor days. That means how fast your people are paying you and how quickly you're paying your suppliers. The next thing we would say is to have the right support. Now, we are definitely biased, but having a good and trustworthy accountant gives you the financial support when and if you need it. While helping you with your reporting obligations, your accountant can give useful insights on how and what you could do in order to achieve your goals. We also keep up to date with the ATO, so sometimes, especially through COVID with all the stimulus packages, we know those rules and we can always help. And we always suggest that you know your break even. So let's recap. The key things that we think you need to remember are: know your numbers, especially your break even. Always look for efficiencies, and your accounting software is the first place to start. Have the right support. Know your accounting system. And finally, I can't stress this enough, just know your numbers.
Thanks, Lisa and Georgia. Now, tomorrow you'll receive an email from us with the recording of this webinar, presentation slides, and other links that you might find useful. Please feel free to share this email with other colleagues or businesses that you might find, that they might, think might find helpful. All right, let's get on to the questions. We've got quite a few, I think, by looking at Avril writing away. The three of us are now just going to pop our videos back on for the panel and to answer your questions. Avril, let's get started.
Sure. Okay. So our first question is, in my business, I have ups and downs and it's hard to forecast how much tax I have to pay. How can I plan better so I don't end up with an unexpected tax bill?
I think we've all got something to add here, but I'm going to hand over to Lisa and Georgia first, and then I'll apply what we do at Sparrowly Group.
So typically with our clients, I'll look at it in two ways. If you are registered for GST and you need to collect, I would be putting aside 10% of everything that comes in, so you can afford your business activity statement debt at the end of the quarter or month based on your reporting. In terms of income tax, a nice baseline is to probably put aside about 25%. And that's not of your income, that's of your profit. So if you know you've received $10,000 that month, but you've had to pay $5,000 in expenses, of that leftover $5,000, I'll be putting 25% aside just to ensure that you've got that little kitty. At the end of the day, with our new reporting systems, typically certain businesses will be paying their tax up front in their business activity statements, and hopefully you'd have a little bit left over, and then that's just a bit of the cream on top that you get to keep.
Yeah, and that's certainly been great advice that Bacchus have given us. When we first started and we didn't have enough historical data in terms of how we were performing, we were paying a fixed amount every quarter when we were lodging our BAS so that we didn't end up with a whopping big tax bill at the end. Now that we have more historical data, we work on a percentage system. So I won't get into all the accounting terms that sit around it, but essentially it's forcing you to put that money away. And if you end up not having as good a couple of quarters, it will help alleviate, and you might end up getting a little bit of money back, particularly for all the COVID activity that's been happening, and it's been a nice surprise for us. Thank you to Georgia and Lisa for sorting that out. But also it forces you to save. because if you are nervous that you aren't able to put that money aside, and I'd recommend putting it into another business account, so you're not touching it, then at least the money's going out the door every quarter over to the ATO, and you're not tempted to think, oh, I've got all this extra money.
Excellent, thank you. Okay, and how do you do your budget planning each year? I guess that one goes to you, Giovanna.
All right. Well, different businesses will do it differently, but we start with a Google Sheet or Excel spreadsheet, very simple, profit and loss, so income and then expenses. We have a fun little terminology that we use, and we call it bacon. So that's confirmed sales, and bacon with a side of eggs, because that's based on our probability of winning certain pitches. We can thank Ben and the team for doing that, and Lisa and George always get a laugh when they see that. But that essentially is our budget that we use for our forecasting, and we are constantly keeping that up to date, because we're constantly pitching and winning and losing work, because that's business and that's competition. But it allows us to also look at, you know, what's coming in and the expenses. So we use a spreadsheet, but then that gets loaded up into Xero. We do use Xero, and we use what's called the rolling forecast method. So every quarter we then pull down the actuals, we update that budget, and we're constantly reviewing, particularly being particularly good because we have a quarterly planning meeting with Bacchus, which I highly recommend, is just really good practice.
Georgia and Lisa, do you want to add anything to what Giovanna's just said?
When you're a new business, it's actually quite difficult to budget, but what you have to do is look at your costs. And I always start a budget with expenses. That's how us accountants are trained. You need to know what your anticipated spends are going to be to make sure that when you sell yourself or you sell your services, you're selling them at the right price. So I would always look at your costs. Like, things that we can't live without at the moment are buying maybe a new computer, phones, internet. They are the things that are going to get us running. So if you know your basic costs of those and you're just operating by yourself, then you go, I just need to cover that. And that would be your starting point for your budgets. Yeah. Once you're in business for a couple of years, you probably can actually start looking at your historical profit and loss statements and going, right, how did I track? That year I did really well. And it could be because you won a client, or you had a special project that you're not typically going to have. And then you can start to annualize and just look at what you've done in the past and go, well, except for this outside of my special project, everything else has been the same, and then that would help you build your budget.
Yep, I totally agree with Lisa, and we do start with our expenses first before we get to the income line, and that's super important. I'd also recommend every month following what we call the 5% rule at Sparrowly Group. So looking at your income and expenses, and just a little hack that we do is like, how can we be 5% better? So looking at efficiencies constantly in the business, and then also how can we do 5% better in terms of what are the opportunities based on the business that we have that we can build upon.
Great, that's really robust answers. Thank you so much. Okay, and if managing the budget planning internally, how much time should I allocate to this?
Do you want me to start off, girls? And then
you start off, Jenna.
Okay, so I do manage the bookkeeping as part of my role at Sparrowly Group. So that includes all the invoicing, all the expense reconciliation. Every week, Ben and I have an operations meeting. It's called Ops and Negroni. Just one Negroni for me, thanks. But in that hour, that's where we review any new information. So any new proposals that we've put in, so we can put into the sales pipeline, looking at efficiencies, etc. So all up, I probably spend, and I also do the payroll as well. And so all up, I probably spend about no more than an hour and a half each week. And if you're doing it, if you're chipping it away, it's not overwhelming. So I definitely recommend don't leave it all to one day and go, oh, Friday's going to be my finance day, because it never happens. Have a routine meeting, yes, to do your reviews, like we have our ops and Negroni, but, just, 15 minutes here, 30 minutes here, etc., to just keep on top of it. Otherwise, you'll end up looking at Xero or MyOb or QuickBooks or whatever you're working with, and you go, oh my God, I've got all these things to reconcile, and it just becomes overwhelming. And then you end up spending a lot of money if you're an accountant, or end up outsourcing it to a bookkeeper who's, where you could probably just learn these basics to manage internally, particularly for small to medium-sized businesses.
Lisa and Georgia, do you want to add commentary to that question? It's okay if you don't.
So I think 2 levels. If you're setting your budgets, I think the first time you ever set your budget is probably when you need to apply the most brain power and probably just focus a little bit more time, because that's the first time. What you'll start, your budgets aren't fixed. I think that's the best way to say it. They grow and they evolve. So the first time you'll spend a little bit of time and you'll go, right, this is what I'm going to spend. And then 3 months in, you look at it and you go, oh, hold on, I spend less on my phone, I'm just going to change it. And your budget doesn't have to be something that you do in July for the whole year. You can do it in July and then, oh, I've had a big win, I'm going to and I've saved money, I've negotiated with Optus a deal on my phone or something. So then you go in and you change it. A budget's an evolving thing. In terms of bookkeeping, I actually think what Giovanna said is spot on. If you do a little bit every week, it is easier than having to plough 4 or 5 hours at the end of a month, or even worse, where we've seen sometimes where people spend days at the end of a quarter. If you're going to remember on Friday or on Saturday what you bought on Monday, but you are not going to remember in September what you bought in July. So it's going to require more brain power. And let's be honest, your brain power is better spent on your job and what you're good at. So if you just chip away at it every week, it really does help.
And I do want to just add that if you are at a stage where you want to bring in a bookkeeper, and that's absolutely fine, I just think it's really important as a business owner, you've got to know your numbers, you've got to be on top of this stuff, and you don't want to, that shouldn't be a blind spot and just outsource. I mean, I know a lot of other people would recommend, I'll just outsource it. But then what happens is that when we're working with small to medium-sized businesses with the mentoring work that we're doing, they have no idea even how to pull the, a profit and loss statement or a balance sheet, or, why they've got certain entries in under their wrong chart of accounts because the bookkeeper's gone off and done whatever the bookkeeper wants to do. You're the owner of the business. You need to keep across this. And when you are working with a bookkeeper, you've got to work like this collaboratively, and that's really, really important. Otherwise, you're going to end up with a big mess at the end and then be wondering why your tax bill's so, why your accountant's bill's so big. So this is just about keeping your house in order every day and getting you confidence in all over those numbers.
I think that's a really important point. Thank you, Giovanna. And I guess to that point, we've got a question which is a little bit more technical. So we have not been able to operate since Australia Day this year due to bushfires, floods and COVID. Our accountant has forgotten to submit my JobKeeper payment for July to the ATO, and she says that it's virtually impossible to apply for it after the due date. Is there any way that this can be rectified? We're desperate for funds.
Oh dear, I'm handing over to you guys over at Bacchus.
We'd have to probably look up the rules of late lodgement for JobKeeper. We've not personally had this situation.
No, but my first point would be to contact your accountant and get them to liaise directly with the ATO. The ATO will give graces. If you are a business that is impacted by bushfires, floods, and then you've had to close due to COVID, just because you miss a due date doesn't mean, prima facie, it will mean that you're out. However, there is there are many ways of getting asking for leniency. So I would actually be getting your tax agent to contact the ATO.
They've also been bringing out sort of amendments as well, so maybe have a look at those. There's quite a bit of information online. So, you know, there might be, your accountant maybe initially didn't know that they could resubmit it or reapply, but they might have changed the rules around that. So just have a look on, maybe do a little bit of research.
And I don't know where you're based, but because of certain lockdowns, and I'm thinking about Victoria, with that, a lot of people have been more focused on getting their businesses ready for an additional lockdown. There may be other, like you do say bushfires, I'm assuming it's going to be, it might be close to it's probably New South Wales, but I'm just saying they could, the ATO, I have not seen for small businesses them come down like a ton of bricks on people. It's actually really helpful with small businesses. So I would, and we've done it many times, we've pleaded cases for clients across different ways.
I have to absolutely agree on this, and thanks so much, Lisa and Georgia. It's your accountant, if you're paying your own accountant to do a job, it's their responsibility to get on the phone to the ATO and to plead your case. So just because your accountant says, oh no, it's not possible, if you don't just take that as fait accompli, okay, I think that's really important to push back and say, look, we need you to ring the ATO and get on the phone and help us out here and provide that feedback. Now, we don't have that situation because we've got these guys and we work very proactively, but this is also why the relationship has worked, because we have our quarterly planning meetings. We are on top of it. But even when just last week, I was just about to ring Georgia and say, Georgia, what's the deal with the next round of JobKeeper? And boom, in my inbox comes in all the detail, but also based on your earnings for these particular quarters, this is what you earned, you know, last year. So I didn't even have to go into zero. If I didn't want to, that wouldn't have taken me long, but I could quickly work out whether we were eligible for the next round of JobKeeper. But likewise, some of you in New South Wales would be aware of the Service New South Wales, the additional $3,000 to return back to your place of work and get you COVID safe and open. Now, Sparrowly Group were successful, as were a number of businesses on this call for the $10,000. I'm very thankful. Thank you, New South Wales Government and Service New South Wales. But we weren't eligible for the $3,000. And we weren't eligible because our ANZIC code, which is basically the code that categorises what our business is, was not in the list. Now, you know, we checked, we weren't sure, we applied, we got, you know, basically bounced out because our ANZIC code wasn't correct, even though we met all the other criteria. I rang Service New South Wales. They suggested I speak to my accountant even though we were already talking. And I said, Georgia, Lisa, can you guys ring? Now, look, we weren't eligible, and look, you know what, that's just the way the cookie crumbles. Grateful for what we have gotten. But, you know, don't take no for an answer straight away. You know, ask and ask. You know, you just want to be absolutely sure that no stone has been unturned to make sure that you get the information.
And I think that's a really important part of the partnership that your accountant provides to the business. And if you feel that you're not getting an appropriate service for what you're paying, and if your accountant said they forgot, you know, maybe it's time to have a look for another accountant and see who else is out there who can, yeah. Anyway.
And I don't know, Lisa and Georgia can't say this right because it's a professional thing, but honestly, forgetting or just being late is just not good enough. You know, they are a service provider. So your accountant is your business partner, but it's a two-way street. You need to be working hand in hand. If you're just connecting with your accountant just when you need them or at tax time, well, you're not going to have that relationship, and then there just won't be that level of care. So find a way to build that collaboration and partnership with your accountant throughout the year. It makes a heck of a lot of difference.
Okay, a few more questions. So if you start out as a sole trader, when is the right time to transition to a company or change that?
Depend on your circumstances, I guess.
There are two ways to look at it. One would be a liability factor. Sometimes people won't actually enter into contracts with you unless you are a company. So at that point, you would need to do it. At other points in time, it would be just around when you're making about $80,000 worth of taxable income, probably and taxable income means your profit at the end of the day. That is almost on par. When you start to go above that, that's probably when you'd start to look at a potential restructure. Now, this is completely outside of this, but individuals are able to restructure into different entities, and there are that will trigger a capital gains tax event, but there are ways of getting around it, especially because of small business. And I'm not saying there are rules around small businesses, and it allows them to change structures without having any additional tax implications. So what I would recommend you do is, if you think you're wanting to change, I would actually approach your tax agent, that they would know your affairs, and you can actually sit and have a conversation. The advice will cost you some money, but it could be the best money you ever spent. It could be the potential of, if you go from yourself to a company, then you're going to start being secured under like a liability issue, but you also may have more tax efficiencies there based on the type of business you have. So it is, the $80,000 mark is kind of where I look at it, because up until about $80,000, companies and individuals will pay roughly the same tax rate. Once you get above that, that's when you'd start to look. But I would definitely be talking to your tax agent just to see what kind of benefits you could access in terms of rolling from one entity into the other.
Great, thank you. And our last question, we went through financial health check as part of the presentation. So where would you start, or what are some things and steps people can do, say today, straight after this webinar, to get the ball rolling on a financial health check?
I would go into your accounting system and download your profit and loss. And the first thing I would do is run through your expenses. And it can be something as simple as things that you know don't change. You say they're fixed. I have to pay that, whether I'm not in the office or I am in the office, I have to pay that. I don't get a choice. And that's your fixed. Everything else after that is very variable. And sometimes it's actually your variable costs that you can actually negotiate on first. Some people have, some businesses don't actually look and realise, going, oh yeah, it's like I spend $100 on coffees for my team. But when you spend $100 a week on coffees for your team, that starts to add up very fast. You go, right, love my team, but maybe do I buy a kettle and some coffee? I buy maybe 3 coffees a week as opposed to 10, and then the rest we do in-house. Or can I spend that money elsewhere and get more for my money? Like, can I use it on an additional staff member? So my first step would be looking at your profit and loss. And if you've been in business for more than 12 months, a lot of systems will allow you to do a profit and loss by month. Compare, see where you fluctuate. Because did you fluctuate in one month because, oops, forgot to pay a phone bill and I had to pay double? Is that why? Or was there, did you actually travel and have a roaming charge in there? That's not always going to be a cost that you have to bear.
If you don't know how to get your profit and loss, I'd probably start with learning your accounting software. Make sure you know it, because if you can look into and extract everything you need out of it, you can then start doing that sort of analysis. But if you can't extract that information from your accounting software, you're blind on your numbers. You can't even view them. So I would, if you don't know it, I would also start there.
Yeah.
And can I just add something in? Sorry, just if you are working on an Excel spreadsheet or a Google sheet, back when I was working on an Excel and Google sheet, in my P&L, when I would put the reconciliation in, under each chart of accounts code, I would, and if say the amount for that month was, say, $360, I would just put like a comment in that cell that would break down what the $360 was made up of. because you need to be able to, even if you're using a system like Excel or Google Sheets, you need to still be able to see what it's made up of. Whereas if you have an accounting system, you can pull that really easily. But we understand that if you're just starting out, or, you know, you're smaller, you might just, you know, just getting your spreadsheet up to date or set up is important. So just a little hack if you are using a spreadsheet, but it's really wonderful when you do go onto an online system, and it's life-changing, I reckon.
And one other thing would be is if you're looking at your profit and loss, that bottom line that says profit, if you divide that by your total sales for that month, that will tell you what your cream on top is.
Mm.
So
Percentage, yeah.
it will tell you, it'll give you a percentage. So let's just say you had you brought in $10,000, you had $8,000 worth of expenses. The little balance is $2,000, that means it's 20%. So for every dollar you brought in, you got to keep 20%. And that's a starting line. If that is a really low number, if you're looking at under 10%, you'd probably want to start reassessing some costs. That would be my first thing, because the best way you're going to make money the first way is not by increasing your revenue, it's actually by decreasing your costs. That is the first way you start to make money, because you're not impacting your clients. All you're doing is potentially taking away, and it's potentially not necessary spending. And so you should look at that.
Really robust conversation, ladies. Thank you. That's the end of question time.
Great. So this concludes our webinar for today, but just stick with us for 2 more minutes. We've just got a bit more info to give you that'll be super helpful. So please feel free to reach out to us if you have any questions. Our contact details are on the slide, and when you get your EDM tomorrow, we'll also make sure that you have our contact details, that you can reach out to us at any time. Thank you so much, Lisa and Georgia, for your time and your expertise today. Now, a reminder, like I mentioned earlier, that tomorrow you'll receive a recording of this webinar, slides and supporting resources. Now, just as we wrap up, we're going to be taking a short break from the webinar series because we're going to work on new and additional topics. So we just want to quickly recap what we've covered in the last 5 sessions. First of all, amplifying your business, and this is for the tourism businesses who jump on through the Australian Tourism Data Warehouse, but we also touched on other online listings based on relevant industry sectors that you're in, because we know that we have a range of industry sectors on today. Demystifying marketing, maximising your distribution channels, making your business accessible, and finally today's demystifying numbers. Now, lucky you guys, we're going to also send through the links to all of these webinar recordings and the supporting materials. So you'll get that in your email as well tomorrow. So keep an eye out, because it'll be a big email, but it will give you all the links. And the idea is that, you know, you can download them and put them into your business toolkit. As we work on new topics for the series, we really want to welcome you guys to send us feedback. We want to know what else you want to learn about, and then that way we can continue to tailor these for you and your business. It's really important that these are helpful to you, that they're short and sharp. I know we've gone a little bit longer in question time today, but I think it was really relevant. And that there's no sales, you know, as part of this. We just want to be helpful, because we, you know, we're all in it together as small to medium-sized businesses. So if you have any special requests, just hit reply to the email you receive tomorrow and drop us a line, and we'll pick that up as we start to plan out future webinars. Alrighty, so thank you so much for joining us today. We know how busy you guys are, and we know how precious your time is. So thank you, and enjoy the rest of your day. See you later.
Bye.
Bye.